Welcome back, everybody, for our first sort of main stage panel. I know we have a bunch of concurrent events happening here, so if you are interested in a view from the top and hearing from the three of the, in my opinion, top CEOs in the water sector today, all over the world, you're in the right room. So with that, I won't take up too much time, but I will introduce the moderator, Damian Georgino, somebody who has been rethinking water for a while, has been rethinking water with us for a while, and somebody who is going to be leading the discussion, but is also a partner at Womble, Dickinson, and an investor in the water space. Next to him is Ken Bockhorst, who is the CEO of Badger, has led that company to tremendous growth in the smart metering business, both in the US and internationally, one of the best performing stocks in the water space. Next to him is Josiah Cox, who has been rethinking water as well with science, even before science, and is leading CSWR, which is, as was mentioned earlier in the day, one of the fastest growing water utility in terms of aggregating and acquiring utilities and refurbishment and driving tremendous impact at the same time throughout the Midwest. And then to his left is Sachinis, who is the CEO of EYDAP, which is one of the leading water utilities in Europe, to give us a global perspective, give us a perspective from the Mediterranean. We're thankful that he's here in New York in Climate Week and able to join us. But with that, I'll pass it to Damian and look forward to the conversation.
Thank you, Alex. I'll dispense with the introduction since Alex just did the introductions. But Damian Georgino with Womble, Dickinson. As Alex said, I've been in the space, in the water space for a while. I've certainly enjoyed the Rethinking Water conference as it began in 2019. I was an initial participant there, and it was 40 people, Alex, or something like that, now grown to over 1,000. So appreciation to Alex for leading the effort to actually have folks focus on the water sector, a sector that I've been involved with for a long time on all angles, as an investor, as a lawyer, as an advisor, as management. And it is a space that's going to attract more and more investor interest as this scarce resource, fixed supply, ever-increasing demand, becomes more precious as time goes on. So the panel here, we're rethinking water. We're looking at it differently this year. We try to look at it a little bit differently each year. But we have three different participants in the space. And what I'd like to do is give a little context as to where you all play in each one of them, starting with Badger. Badger's been a stalwart in the public company space in the water sector. Josiah at CSWR, from nowhere to the 10th largest water utility in the country. Down at the end, you've got in Greece, you've got multi-billion-dollar projects that are going on. Just give everybody a perspective as we look at water, how you're looking at it, not only as a strategic player, but where the future may lie.
Well, great. Well, thank you for the introduction. As you talked about the conference, I put a lot of value in what Alex and the team here does at Columbia. This is the third out of the last 4 years that I've actually participated. So I make a point of coming out here when invited, so thank you for that. Badger Meter is a very proud 120-year-old company headquartered in Milwaukee, Wisconsin. Interestingly, like many things in the water industry, for 115 years we did metering. And where we've come in our journey is there's been a tremendous amount of innovation around advanced metering infrastructure and bringing radio communications and data and software to metering. So it's gone from just a meter to a smart meter that provides real-time information for leaks, consumption, all the different things that people are looking for. And over the last 5 to 6 years, we've started branching out. And if only Ali Zaidi would have known when he said, we need a company that does quantity and quality. We do that because we bought 2 water quality companies 5 years ago for real-time water quality monitoring up to 60 different parameters. And we just need more sensors. So we've acquired an acoustic sensing pipeline company, RTUs, and we bring all that together. So I think it's not just Badger Meter. We have really respectable competitors that also do similar things. So at least from what he thinks the industry needs, there are people investing in it and bringing it together to try to do that. So really proud. Again, 120-year company. I'm the 6th CEO in 120 years. So we're a company that thinks long-term. So when we're making bets on the industry, our customers expect 20-year investments in their assets, and we certainly intend to give them 20 years or more of value.
This space as well. Tell us a little bit about what you've been doing and how you look at similar things, but at a different angle.
Yeah, so I am science's first water investment, so I think of myself as the oldest child in the family, which has got its pros and cons in the family dynamic. So really, Citrus Lakes Water Resources, we're an investor in water and wastewater utility, and really what we're solving is a problem of consolidation. So you've heard, there's 85,000 water and sewer utilities in the United States. It's really crazy. On the small systems, I think 75% of the acute human health violations occur in systems with less than 3,000 connections. So what that really means is a water infrastructure crisis, it's not looming for small communities, it's already here. So as a company, we have bought 900 systems across the United States. We're actually the largest single owner of domestic wastewater treatment plants in the United States, so we're in a unique position to really innovate on how you fix these systems, how you bring quality water and wastewater, deliver it to communities. But I think from my perspective as CEO of this company, we've taken 300 domestic systems from non-compliance to compliance. So we've done more domestic turnarounds for water and wastewater systems than any other entity since the passage of the Clean Water Act. And think, 900 is all we own compared to 85,000. So the work in front of us, and really it's kind of facing us all as a group of water industry professionals, is enormous. So that's where we're tackling it.
And Harry, you're obviously in Greece, in Athens primarily, I believe. We in the U.S. kind of look at private ownership of water systems differently. And full disclosure, I don't disagree with what the last panel was talking about, privatizing water systems and what John was saying about profit motives. I've been around forever doing privatizations around the world, affirmage, public-private partnerships, whatever you want to call it. Tell us a little bit about how you're doing it in Greece.
Okay, but first of all, let me tell you a little bit about the history, since you mentioned history in 125 years, and I'm not going to go back to the ancient times when we had the first water and wastewater systems in the world, but I'll go to the history of the company, which is about 95 years old. And I mentioned this not for any other reason, but it was built initially by an American called Yulin, who actually had helped build the subway system here in New York. So he knew how to make tunnels, so he built a reservoir near Athens, which is actually the only reservoir in the world that is made of marble. It's covered with marble. And then he made the 20-kilometer tunnel all the way into Athens, into the first water treatment plant in Athens. That was 95 years ago. So obviously the company has grown, we have more reservoirs, et cetera, and we're in a very interesting position. We serve about 5 million people, which is a lot of people. We have 2.5 million meters, and we're going to be replacing them with smart meters, so he likes that idea. He may want to get some of his meters in there. And the interesting thing is that we are owned a little bit more than 50% by the Greek state. We're listed in the Greek Stock Exchange, so 51% of the shares are owned by the Greek Stock Exchange, by the state, and the rest of the shares are owned by different investors, including pension funds, and also by some US investors. John Paulson owns about 10% of those shares here in New York. So it's quite interesting being a CEO of a company like that, because you have to cater both to the state needs and to the needs of the investors, and the question is, how do you do that? So what I did is I lobbied for a regulator, and we got a regulator who's actually starting to work before the end of the year. And why did I need that? I needed that because there needed to be rules, because the investors need to know how the company is compensated, because in the end, if you think about it, we talk about investments, we talk about technologies, we talk about capital structures, et cetera, but in the end, someone has to pay for all of this. And the question is, not the question, the answer is the consumer has to pay for it. So the regulator helps in actually putting the rules, whether they are quality rules or any other kinds of rules of how you're going to make back the money and how much you're going to charge and what the rates are going to be. And everyone knows how to play the game. Now, the way the regulatory system will work in Greece is based on the regulatory asset base. So we are going to be compensated for the costs that are going to be approved by the regulator. So if I take my office to a Christmas party, he may not approve that cost, okay? So, but he may approve all the other costs that are needed. The depreciation of the existing asset base, and then a return based on a weighted average cost of capital of the regulated asset base. So all the new projects that I want to build, that I think are important to build, are going to be approved by the regulator if they are important for the consumers, and we're going to be compensated for that. So now this is interesting because it's going to be the first time a regulator is going to work in Greece, because let's assume we do the calculations and you need to increase the rates by 20–25%. It's going to be very interesting to see how the government is going to react to an independent regulator. Is the regulator going to be really independent, or are they going to say, look, a 20% increase is too much, even though it's just equivalent to a cup of coffee per month per household, so it's really nothing. But again, it is politics, policies, and how these to interact. So it's going to be an interesting time in the next few months to see how all this evolves. But it is getting much clearer, and it is very important to do that. It is very important. We're learning from the whole world. We've learned from the UK because Thames Water, there they went in, they over-leveraged, and then they have to raise the rates exorbitantly so that they can have good quality water. In our case, we're going to have a debt-equity ratio not higher than 40%, so there are limits. And the important thing is that beyond that, you have to figure out how you structure your capital and who pays for all of that and how you can find the money to do it, and are you going to get loans and from where? And there are also the possibility of grants if you cannot pay for all the necessary investments yourself. So quite an interesting balance for all these things.
I'd love to have a panel where we actually talked about the value of water, because we spent a lot of time with, I was on the National Infrastructure Advisory Council where we talked about the value of water, been involved with other companies, large, like a NEOM, who are looking at what is the value of water. I'm on another panel talking about the economics of water, and there's not a right answer. Some people think that water should be free. Some people think that water should be valued at the price of life. Because without water, you're dead. We talk about climate change being an existential threat, but 4 days without water, you're dead. So it's for another day on value.
Make a quick comment on that,
Sure.
if you don't mind. I don't want to take up all the time of the panel, but we have an issue with drought these days in Athens. Okay, so if the drought continues, we've had it for like 2 years. If it continues for another 3 years, our reservoirs are going to be out of water. So we looked at all the alternatives. So again, what is the value of water? You have to look at all the alternatives, and you have to choose which one is the least expensive one. So we looked at desalination, too expensive. We looked at recycling. It will take too long. Maybe you have it as a backup in the end. We looked, and actually this is what we're going to do, in going 30 kilometers further upstream and connecting to a reservoir for, of an electric utility that has actually quite a lot of water in it, and they use it for hydroelectric energy. And we're going to connect to that, and but you have to make all the calculations and figure out which is the cheapest one, because and the regulator, that is what they're trying to do, help guide you through all that to figure out what is the least expensive for the consumer. The regulator protects the consumer.
Another question that I had, and it's all around technology. You've talked about new sensors and the technology around that. You're deploying technology in systems that maybe didn't have the ability to finance that technology. Also, you're looking at technologies and how that might go, and both of you how that might go into a rate base. So it's equipment technology versus pure technology, whether it's AI, IoT, sensing technology, or otherwise. Could you talk a little bit about the role of technology and how that fits into your strategy with your customer-facing side of things?
Yeah, I'll go quickly. So for us, when we think about what we can do for water utilities, the first thing is how can we enable to actually provide the service that they need to provide? And it was talked about earlier this morning about aging workforce. We've talked about baby boomers forever, but that time is here. So with utilities, I'm sure you're seeing it every day. Every industry is seeing it. 30, 50% of the industry will retire in the next 5 to 10 years, and that institutional knowledge, that ability to just find people to do the work is not going to be, it's not going to be available. I think you can agree, disagree, but I see you shaking your head. So this is where technology can just help people be able to provide the service. And I think the way the industry moves is then, okay, they start investing in the technology when people retire. So this is why I think we're seeing some of that snake forward now, because people are walking out the door. Then as municipalities or private water starts to use the technology, they realize the benefits are there for reducing truck rolls, for identifying leaks sooner. And it stops becoming less a question about ROI, and it becomes more a question about what's the best way to run the utility and provide service for my customers.
Yeah, I would agree. I think, reducing expense in a tight labor market is a huge deal, because expenses are passed kind of dollar for dollar to customers. And right now, with companies like Badger reducing the cost of remote sensors, I mean, you think about 10, 15 years ago, the amount of sensor you can get per dollar, I mean, it's 100 times different. And really for remote operations for a company like us, because we're doing disparate utilities over an 11-state footprint, to be able to monitor all those real time and to be able to roll trucks appropriately, to time when technicians need to go out, those kind of things, those have direct impacts on rates. Because what we want to do is we want to remove expenses from customers' rates so we can put more investment towards quality, resiliency, and all those things that we need to do in order to keep providing safe and reliable service.
Well, you've got your model of going after adjacent systems as well. I can remember, I used to live in Pittsburgh, Pennsylvania. Allegheny County had 131 municipalities. They all had their own water and wastewater utility. Seems crazy for a county that's 45 miles wide. Are you seeing the benefits of adjacencies and economies of scale and equipment purchases, or even consolidating, shutting down one treatment system for another?
You really can't imagine, we talk about how fragmented the water industry is. Literally, we've gone into neighborhoods that have 10,000 people, and there are 100 wastewater plants. And they're literally on opposite sides of the same creek. And really, it's a regulatory problem where you don't have state environmental regulators forcing consolidation. So really, as a company, CSWR is a change agent. So we're coming and buying these adjacent systems, taking some of them offline, doing combinations. We're even bringing, services tying into existing municipalities, becoming wholesalers. So really, hey, the problem is we have too many systems and we don't have a consolidation of policy nationally or from a state level. And those are the kind of things that I really think private actors like ourselves are very good at, because we can see the efficiencies, prove to the government regulators that we are driving benefits for the customers, both from a cost and a quality standpoint. But you're exactly right. It is crazy how many small entities there are.
When we were doing the original consolidator back in the 90s, we used to always say there were 53,000 water utilities, 85,000. And you look at places like Texas, where you have the master plan communities and you get the MUDs, the municipal utility districts. That's a new utility that pops up, and it could be water and wastewater at that point in time.
Two things that I'm going to talk about. The first is technology, the second is the consolidation issue. On the technology side, I think we're very lucky to be in the water industry because in most cases, there's a community of water industry players. So a month ago, I was in Singapore, meeting all the people in Asia and sharing best practices. In Europe, you have communities of all the public utilities, again, sharing best practices. Again, there are other networks that connect you, and the problems are exactly the same. It's amazing. All around the world, exactly the same problems. How to deal with your NRW, how to deal with drought, how to do your recycling. What is you see that whether it is, I mean, with Los Angeles, we have a lot of commonality in terms of dealing with drought. Tomorrow I'm going to visit the Department of Environmental Protection here because we own the second largest wastewater treatment plant in Europe, and I want to figure out if they have any new technologies here that we can apply to our plant before we issue the tender, etc. So it's really great to be able to share best practice, and I think that's good for the industry, it's good for the consumers. On the consolidation front, absolutely, it's clear that consolidation helps, economies of scale and all of that. This is something that beyond our own utility and another large utility in the second largest city, even in Greece, there are about 300 small water utilities, and that doesn't make any sense. So I'm lobbying for them to be consolidated into 11 big utilities. And let's see how that goes, because the mayors of very little town are against that because they get a lot out of having one-to-one discussions there on their utilities. But for example, look at Ireland. Ireland has consolidated. They were not consolidated, but through a 5-year process, now they have one water utility in Ireland. So, and we're talking to all of these people to figure out their models and how they moved from many utilities into a bigger consolidated.
Yeah, I see a lot of newer technologies, kind of step function changes. You know, a meter that just was a meter that somebody had to go read, you're now smart meters that take it a step further to look at, you know, I get a phone call if, hey, your water consumption is up. Do you have a leak? And it's no, we just turned on the water for the pool, but that's a different issue. You see a number of people here, participants that are in that IoT AI space, and there's even a participant here that's looking at a water beta. What's the effect of water on a company, any company? So you've got some changes in that regard. Shifting gears a little bit, talking about financing, the right side of the balance sheet, and in addition, at that consolidation level, are you looking for transactions? Badger's a public company, but you still have financing needs. Maybe looking at some technology acquisitions. You've got financing needs. You can say that, you know, in Alex's face, and I'm okay with that. You're sponsored by a government official. I'd like you to each talk about what your future financing needs may be and what you may see in the way of transactions. And transactions can be financing transactions or M&A or joint ventures or otherwise. And I know you're a public company, so you can't say a whole lot.
Well, no, but what I can tell you is our capital allocation priorities have always been first, being the first in research and development. And even though it's a slow-moving industry, we were the first to bring an ultrasonic meter to North America 15 years ago. We were the first to bring cellular technology to AMI 10 years ago. First to invest in real software analytics for the water industry. And those are finally now, 10 years later, taking root. So even though we know it's kind of a slow burn before it takes off, being first has its advantages for sure. Second, being a public company, and especially in a utility type business, investors expect dividends. We've increased dividends 32 consecutive years. And then third is on the M&A front. So in the last 3.5 years, we've bought 4 different sensor and software technology companies. And we continue to do funneling in the water quality space and the software space. And then anytime we can acquire a company that has a footprint where they have customer relationships in markets that we want to enter, that's just a double bonus. So someone had asked about the UK and river monitoring. Well, one of the companies that we acquired in 2020 has a great river monitoring solution. We're monitoring rivers in Europe, India, China, South Korea, and we will be now monitoring rivers in the UK as well. So around the sensors, around the data, and countries that we'd like to do more business with.
Yeah, we can look at financing in three ways. I mean, the water utility business is extremely capital intensive, as everyone knows. So, they talk about $1 trillion. You think about the infrastructure, the Inflation Reduction Act, there was $65 billion allocated towards water. It was nothing. I mean, literally.
The bulk of that went to lead pipe
That's right.
removal,
That's exactly
which is, I mean, I wrote about that. It's kind of misguided.
Right. So you think about how much money is needed just to fix basic infrastructure problems. So, we talk about our footprint, 900-something systems, just the district. So we focus on compliance first. We want quality water, quality sewage services. We're not polluting the environment. We're helping people's health. But beyond that, we have aging infrastructure inside each of these footprints. So we have billions of dollars to invest in the footprints that we own today, much less what we're going to acquire. And I think from a regulatory standpoint, we got some state regulators in the room, they don't realize that there is a competition for capital. You're trying to create an environment where you're welcoming capital to come fix a problem because there is not enough government money to go around. The private sector has to be involved in solving the water crisis just from a sheer dollar standpoint and from technical expertise. And when you look at states that have more favorable regulatory environments where they're giving returns on investment, where you're seeing a stable investment profile when you go in, those are the kind of states that all the companies want to go invest in. And it shows out in how much water investment is being done in each one of those state regulatory markets. So I think those are the things, creating an environment that's attracting private capital and then recognizing how capital intense the world really is are really key.
Well, that's a good point. I mean, the capital needed, EPA has been saying forever, we talked about $1 trillion over the next 10 years. EPA has been saying for at least 15 years, we need to 400 to 600 billion immediately. You look at the American Society of Civil Engineers, came out and gave water infrastructure in the U.S. a D- out of all the infrastructure in the country. It's the only infrastructure that you cannot live without. So to give it a D- is shocking. It's shocking. So there's a lot of investment that's needed. And when you look at around the world, I saw a report that said ASEAN, we need $1 trillion here. ASEAN through I think it was 2050 needs $36 trillion to build out its infrastructure. So the investment in infrastructure is huge. I know you've got some projects, large projects coming up as well.
Sure. We have right now about 2 billion euros earmarked for infrastructure upgrades over the next 10 years. Now, it is interesting, about half of that, about 1 billion, is actually grants from the European Union. And why did they give those grants? Because they said that you're not going to be able to get that money back if you invest the money yourself. And this is for wastewater pipes in an area that are not a lot of people around Athens, but you have to connect them, so this is very expensive. But actually, it's about 1,400 kilometers, which is like Athens to Budapest, or maybe New York to Milwaukee, or something like that. So they're helping with that. So we have the other billion, again, for smart meters, for changing the network that is aging, both wastewater and water network that is aging. And then with PFAS and all of that, all the investments that you have to make in the upgrade of our wastewater treatment plant, it's going to be another 250 million euros above that. And then the solution for the drought that is going to make sure that we have enough water for the next 50 years for Athens, but it will cost another 750 million. So suddenly you're faced with a 3 billion investment program over the next 10 years. So we will work with the regulator to prioritize that. We think we know what the priorities are, but we'll work with the regulator on that. And it is interesting because the European Investment Bank is also stepping in to give lower interest rates for loans that you may want to do that, together with commercial banks. So we're going to look at that. We're going to look at green bonds, because part of the investment also is going to net zero energy and net zero emissions for all the energy, because water and energy are really tied together. So we have to work towards that as well. So it's going to be the next year or so is going to be an interesting year as we select, because right now we have our own cash and we're spending from that. But next year is going to be an interesting year in selecting which financing method we're going to go after.
I'm going to take it a little bit differently now. When most people think about water, they think about residential. All three of you have industrial customers as well. Talk a little bit about how the dynamic of having an industrial user on your system or an industrial user for your sensors and metering systems. Talk a little bit about the role of industry, because my experience has been industry uses by volume 10 times more water than residential.
Yeah, so first of all, for us, we generally selling to the utilities, buy the meters for the commercial users, and then they put the AMI cellular radio on it, pull all the data. So for the majority of what we do with industrial, it is through utilities. However, with the rise of ESG, people more interested in being better stewards of water, they are coming to us now to get more analytics and data on how they use water, how they can conserve and use less. We get a lot of interest now in people monitoring the quality of water coming into their system and the quality of water they're putting back, so they know that they're not doing harm in what they return to the system. So the same products that we have for residential do work within industrial, and we are seeing more pull in that area.
Do I hear you say you're going into not just volume, but more characteristics, water characteristics sensing?
Well, so we have. So with the acoustic leak detection, we were able to help, find water hammers and all different. I can geek out with all the different things but yeah, I mean, it is certainly much more than metering that we're providing to utilities to nobody's going to spend $1 trillion. I get a little fatigued with that talk. Like, everyone talks about that. If someone said, here's $1 trillion, Josiah, go update all 900 utilities this year, you wouldn't even be able to do it, right?
No, we wouldn't, but
Right.
I'd give it a real
You'd
try.
give it a great shot. Give it a great shot. And it'd say, can I please keep it longer and earn interest while I have it? So it is about, I think, investing in technology to extend at least the life of the assets that are there while we can continue to try to catch up. So if we could at least extend the life and invest more than it continues to age, because I think what people forget in that equation is every year it gets older, it doesn't get younger, right? So you have to outpace it while at the same time extending the life of the assets in ways that you can with technology.
Yeah, I would say, we have a smaller industrial footprint, but where we do have industrial customers, they do dwarf our residential customers. And they have an outsized impact on water quality. I think we're requiring pretreatment programs. And really, that's where technology comes to bear for us, because there's a lot of monitoring of those pretreatment. Because you think you have 3,000 homes and you have one foundry. That foundry uses 10 times the water as all your customers. And if they have one, leakage, spill event, something like that, it can destroy your entire wastewater system, like literally cause it biologically dead. So
I can tell you, EPA does have detectives with guns. I can tell you about an event in Connecticut where they came in a blinding snowstorm because we had shut down all biological treatment at the system.
And unfortunately, that stuff happens. So I think we are relying on technology to help solve our industrial issues, right? And to track down issues that go unreported. Because that's the other piece, especially in small, more mom and pop businesses, those are the guys who are more likely to dump something down the drain and not tell anyone about it. And really, the only way you can catch that is having some type of sensing inside the system and be on the lookout that, hey, those customers are the ones that put my residential customers at risk.
In our case, about 20% of our consumption goes to industrial uses. Especially now, because of the drought, one thing that we're thinking about, and to see how expensive it is to actually use recycled water for the industrial uses. Also, this will probably necessitate a policy change to make the people where we can have networks with recycled water to oblige them to take that water, because obviously it's going to be of very high quality to take that water instead of fresh water. And by doing that, we're trying to figure out to avoid directly putting that water into the stream of potable water. And especially if we can make sure that we get the fresh water from the other source that I mentioned earlier, we will not need to do that. Like in Singapore, for example, they have, from the water that they drink, 30% is desalination, 30% is recycled water, and 30% is fresh water. So you can do whatever you want with water. I mean, it's very safe. It's very normal to do that if you need to do it. But what we're going to do is we're going to take it and target it firstly towards the industrial users.
As you look at the future, just to take it a step beyond financing, take it a step beyond technology, a step beyond M&A, what do you see as your industry's biggest challenge? Regulatory. Is it regulatory? Is it consumer? Is it rates? What do you see as your biggest challenges? Well, it was a giveaway on the rates thing.
Yeah, I mean, honestly, our biggest challenge is political will. So, you know, we have tons of communities across the country. You know, the majority of the polluters from a municipal and, you know, system standpoint are publicly owned. They're not privately owned. In fact, you know, obviously I'm a shameless capitalist and a shameless investor owned. You know, we're actually held to a higher standard than municipals are. It means we are the guys that get inspections. We are the guys that, you know, the environmental regulators write sanctions on because they know that we have the money to fix it. So, you know, on a per capita basis, the research shows that we're much better than the public guys. But notwithstanding my shameless plug for our business, you know, people need to fix these issues. They are becoming catastrophic. And because you've got mayors and city councils who are afraid of change, even though they have catastrophic circumstances arising inside their water and wastewater systems, like you heard before, no one gets a vote for spending $1 on a poop plant. Right? They want to cut ribbons at the schools. They want to do all these other things until it becomes a disaster. And then all of a sudden, you're marshaling all these forces. It's 10 times the cost that it would have been if you were doing deferred maintenance, you know, repair over a long period of time. And I think having policies that, like we talked about, drive consolidation, allow these municipalities to somehow profit off selling their systems or having a partnership. We need to come up with new schemes to be able to keep these communities involved, but bring the investment necessary to bring it back into compliance.
You know, it's an interesting point. This goes back a few years, 10, 15 years ago. City of Atlanta, their wastewater system, they were paying $7 million a year in fines. The reason they kept on paying the fines was they needed to raise $125 million to upgrade their system. And so they were looking at privatization. It was cheaper for them to pay the fine than to go out and get the financing to upgrade their system. So I hear what you're saying about the municipal side. Part of it could be tied to just the lack of people, technology, skills. You're redoing, and we heard Ali talk this morning about having funds available from the federal government. Part of the issue is you're giving cheap money to a bad system, when maybe a different way of looking at it from an independently owned enterprise is worth the look.
Two areas that are important for our company. One is ensuring, as I said before, the implementation of the new regulatory framework. That's very important because then all the day-to-day issues and the financing and all that are going to be taken care of. So that's one. But another one, which is equally important, is another point of view regarding climate change. Because climate change doesn't only mean drought, it means a threat to your infrastructure. And we have really seen that over the last 4 years in Athens. Believe it or not, it snows in Athens. So one day it snowed a lot and it brought all power down. So where we didn't have backup electricity generators, we couldn't pump the water up to the higher parts of Athens. So we had issues like that. Now we have fixed all that and we prepared all that. Then you have fires. And we had fires really threaten all of our facilities. And again, we had double electricity feeds, and the fire went around our facility and burned the electricity feeds. And so we have seen everything. And if you have floods, we had another city in Greece with big floods that their whole water network was destroyed. So we are doing simulations. What if that kind of weather phenomenon occurred in Athens? What would be its effect? So preparing and mitigating potential issues of severe climate effects. That's another thing that we do because you cannot play when you have to make sure that you deliver water uninterruptedly to 5 million people. I mean, it would be a disaster if you cannot do that regardless of the circumstances. So
So the reason I asked them to go first is because you asked about challenges. And the guys who are doing the work in the field, they have challenges. I think what we have at Badger are opportunities. And what I do, we've strategically made the decision to be a pure play water company. So all we do, so as the CEO of Badger Meter, all I think about is listening to the challenges and problems that operators have, and then what can we do to enable them or help them solve those challenges or problems better. So, we don't do electric and gas, we don't have other stools, we're not going to, so that I can just think about how can we put all of our resources into helping solve those challenges for people in the field.
So just one last question then, as we run out of time here. Why aren't you considered an impact investment, or are you considered an impact investment? You're by definition, you're creating benefits, energy, sustainability, ESG sort of things. I would think that you'd all be considered an ESG investment.
Well, so we do
I'm
have.
trying to help you.
We do have some investors in the room, and I think they're happy ones. I don't know if I see some hands raised or not, but and we do have several ESG investors from Europe that take a lot of interest with us. I was just in London a couple weeks ago. So you'll never hear a CEO of a publicly traded company say that we're fairly valued. We're always undervalued. But I do think for a company our size, we do get a lot of attention in that space.
I mean, we absolutely are an impact investment. I mean, especially with our whole, thesis. We're investing in underserved and failing water and wastewater, so the benefits are huge. I mean, you talk about, methane reduction, nitrate reduction, pollution reduction, and we measure in dry pounds the millions of dry pounds of additional pollution we remove from local waterways every year. So that's something that's been very good for us from an investment thesis standpoint, especially, here in Wall Street, because, obviously it has global ramifications, even though we're taking Wall Street money and put it to work on Main Street, which I love about our business. So having both the impact in the community economically that way, but having a global impact is a huge deal for us. And it has obviously been very successful in attracting capital.
Our strategy is actually an ESG strategy. So we have a strategy matrix that has ESG at the top. And then on the side, it has safety, efficiency, and development, and growth. So, and in there we have all our KPIs, all the things that we need to do, and that's going very well. We're being rated by all the raters around the ESG principles, and we're improving every year. It is interesting because I had a meeting, I was at a meeting where the head of IOSCO was there, and basically ESG reporting is going to be at an equal footing with financial reporting. And it's going to be equally important. And the reason for that, and they're really integrated, because they want proof for anything that you do around ESG, how it is financed, how much it's going to cost, how it's going to impact your company. So I'm actually considering, I'm looking for a new CFO right now, and I'm looking for the position to expand in what it does and bring the ESG underneath that, because you cannot ESG if you don't connect it with the finance function. So this is going to be quite interesting, and I think it's here to stay, and we're trying to do that, because when the regulatory framework is applied, then what's going to make the difference in terms of multiples at the exchange is going to be how well you're doing on the ESG side.
Well, thank you very much. Alex, questions?
So, as was mentioned earlier in the day, the Colorado River Basin is in a 1,000-year drought, if I heard the gentleman correctly, and also that the alfalfa grown in Arizona goes to the Middle East. So if Arizona, and Phoenix in particular, is getting their water from the Colorado River, which is running dry, and you have the ag industry taking all this water, how do you solve the conflict between drinking water for consumers and ag water that's taking a huge amount. And of course, this issue is pretty large in California as well. So I'll lay those small questions on you.
So we have operations. Arizona is one of the states we operate in, and we actually have a number of utilities down in Yuma, which is the very end of the Colorado River. So it's the end of all conflicts, and right there in that city. Interesting. I think what people don't realize about the alfalfa being grown in Arizona and sent up, that's really a legacy of the fact that any leftover water, it's unlimited withdrawal. So what happens is you have all these ag interests, all these community interests that have rights on the Colorado River, but are they withdrawing their complete rights? No, they're not. Is there excess water? Yes, there is. So what happens is anything that's left over, you can withdraw because we have no treaty with Mexico, so they don't care about any surface water crossing the border or any underground aquifer crossing over. So it's that. The alfalfa comment, it's real. We are exporting water over the place, but that's really a function of having a really poor water rights system at the very end there. In terms of balancing those interests, I mean, that's above my pay grade. We obviously need agriculture very badly in this country, and it's a huge source of strength. But man, talk about a big water user. It is the largest water user in the United States.
So industry uses 10 times more water than residential. Ag uses 10 times more water than industry. So ag is the biggest user. We should probably take offline that discussion because I've got far too much information and history on the Colorado River and the 7-state compact and the error that they had in the original allocation of 7.7 million acre feet of the Colorado River. It was just wrong from the get-go. We can talk about aridification. I don't like the word drought. We've got aridification in the Southwest. So it's a complex issue, certainly, but you mentioned Mexico. Mexican government sued the U.S. government when the U.S. government put a ceramic underneath the All-American Canal because they were counting on that water leaking out of the canal, and whenever you solidified it underneath, there was no more leakage. Mexico sued California, or sued the American government over that. So you've got a complex system, an allocation system that goes back to 1929, I believe it was. And you have dynamics that have changed. Nevada wasn't around in 1929. There's, Reno was around, but you didn't have Las Vegas sucking out a lot of water. You've got another issue where you do have groundwater in some of those states, in Colorado, in Arizona, and we only talk about the Colorado River. I used to live in San Diego. We got a big chunk of our water from the Colorado River. We were the end of the pipeline. We got whatever was left over. But you go to ag, and in California, in particular with the compact, California at the time was a big ag user. Of the 7.7 million acre feet of water, California got 4.4 million acre feet of that water. Okay, the Imperial Valley of California, which is the southern breadbasket of California, every acre of land is allocated 6.6 acre feet of water. It's taller than me.
And if I could just make one plug, so I'm a proud resident of the state of Wisconsin, where we're bordered on the west, north, and east. We have 15,000 lakes and rivers inside. Economy's thriving, so move your businesses there because you're not going to run out of water, and 20% of the fresh water supply in the world is there. It's a wonderful place. Winters aren't as bad as they say.
Just to round that out, though, those farmers for that 6.6 acre feet of land pay $20 an acre foot delivered. Okay, you go across the mountains to San Diego, they pay $1,400 an acre foot. It's a complex issue that we can take offline. I could talk to you about it forever. There will be wars over water around the world, and there will be state issues that you'll have to contend with. And again, it all goes back to the value of water. What are you going to pay for water?
To conclude, at 4 o'clock, we also have the GRAB, which is specifically talking about water, food insecurity, and specifically many of those issues. So I would encourage everyone to come to that at 4 o'clock and continue this discussion. And beforehand, I do want to say one plug. You plugged Wisconsin. I want to plug the beaches in Athens. A lot of nice water. So, but I do want to thank the panelists. And
he keeps on telling me about Greek food, but he never takes me.
Yeah, so we will now be breaking for lunch. There may be some Greek food, may not be some Greek food, depends on how quickly you run outside. But we will be reconvening in this room and for the first afternoon keynote at 12:45. So please enjoy lunch. Thank you to our panelists, and thank you to the audience.